Welcome to the Trading 101 Psychology Series course, video number 1. We are here to discuss the single most important thing that will determine if you will be successful or not in Forex trading. It is not an indicator, and it is not a strategy. Rather, it is an understanding of mindset and what is really going on in the currency markets. If you are watching this video, you have probably had some trading success, but you are not where you would like to be. Or maybe consistency is a problem. Or, maybe you find yourself still struggling and are losing, over and over again. It's almost as if the market does the exact opposite of what you do, nearly every single time. There is a reason for all these situations, and we are going to discuss what that reason is. So let's get started. How you think is more important than you think. Let me repeat that one more time, because it is extremely important. How you think is more important than you think. We are going to discuss 4 main points in this video. These points are: what trading really is, how you should think about trading, how our brains are wired to lose, by default when it comes to trading, and, to really understand how and what, the big banks are thinking. Okay. First things first. We need to define what trading really is. But before we do that, there is one harsh reality that you need to know. And, that is the triple 90 rule. The triple 90 rule says the following: 90% of all traders will lose 90% of their money within the first 90 days of beginning to trade. Okay. What trading really is can be summarized in just 11 words. And that is: trading is the systematic transfer of dumb money to smart money. That is what trading is. It's not technical analysis, nor fundamental analysis, it is not charting, or strategies, indicators, price patterns, or any of that. If you focus only on these things alone, you will remain distracted and unable to see the one simple truth. Trading is merely one group that understands what is occurring, taking money from the other group that does not understand. And it is a ruthless game, with a lot of dirty tricks and manipulation. And that is how you need to start thinking about trading. So, how does this process work? Essentially, there are 3 basic reasons why dumb money is transferred into the accounts of smart money. All these reasons flow through a dumb money funnel that automatically functions based on the basic principles of price action, timing phases, and how it pertains to the market structure. These 3 reasons are as follows. Number 1, a lack of understanding of what it is that really happens in trading in the markets. If you do not understand what is really happening, your probability to get taken out of your positions increases exponentially. Number 2, placing trade entry points and stop-loss orders in exactly the wrong places, many of which are being taught in mainstream trading education. There is a normal ebb and flow of price in the market. Most of the time, the market is moving back and forth in a narrow range between buyers and sellers. Placing your trades and stop losses in the incorrect position within this ebb and flow of price will take out the majority of poorly placed positions automatically, with no effort required by the smart money. All they need to do is wait and let it happen. And they take advantage of this natural ebb and flow of price to generate the liquidity they need to enter their positions, without the dumb money being aware of what they are doing. They must do this prior to moving price up or down. And number 3, letting FOMO, the fear of missing out, and other emotions dictate your trading decisions. If you have missed an initial breakout, or you are afraid you may miss the run entirely, you are susceptible to chase price and enter right where the smart money is exiting the breakout, or fading the market to re-enter, because dumb money is trading based on emotions and excitement. The smart money knows this, and is why most initial breakouts are faded, at least to some extent. Alternatively, if you have levered up your positions to the point where you are trading too heavy, any move up or down in price will amplify your emotions, and make you react to make predictable decisions. You are not thinking clearly. So you are once again primed for being manipulated by the smart money traders. And, the end result? You keep sending your money into the accounts of the smart money, via this dumb money funnel. There is an entire industry built around this dumb money funnel system, and it is repeated every single day. Because human psychology is both predictable and repeatable. There are new traders entering the market every day, A nearly endless supply of dumb money. These new traders will become susceptible to their own emotions. That is a statistical certainty. And that is the opportunity the smart money uses to generate alpha. It works, and it is repeatable, with a high probability of success. Once they understand the psychology of the dumb money, they build their strategies to produce the necessary market liquidity to fill their positions. Usually, those strategies are the opposite of what the dumb money is thinking. There is no indicator for this. It is a mindset, and it is also a skill that takes time to learn. To be able to read what the sheep are doing, and to shear them over and over again, and keep them coming back for more, takes talent. But remember, it is far easier to shear the sheep when they are not focused on what you are doing to them. All that focus on indicators, individual candlestick formations, price patterns, news releases and message board minutiae, help to create the necessary distractions that the smart money needs. So, you need to think about trading in a different way. And start to see what the big picture is here, so you can understand why a single indicator signal, or candlestick formations, or price patterns alone, are not enough to trade effectively and profitably. You must understand what is really occurring, and then, formulate your trade plans and strategies, according to this reality. Okay. That all sounds fine. But, how are we going to do that? That is a great question. And there are probably many answers that apply. But one basic thing to do right now, is to start learning to adjust your mindset. This is so you can maintain a clear focus, to start learning to observe and slowly understand what is really happening in the currency markets, at any given time by the smart money traders. This takes practice, and you will get better and better at it with time. But you need to keep an effort on changing your mindset, about how you view what trading is. Here is a simple, but very powerful way to start training your brain, to start changing how you observe and interpret the market, so you can begin to see the distinct phases of structure, and the manipulation, that makes up every type of market, in every time frame. Learn to think like a neutral emoji. The reason to associate this neutral emoji to your mindset is to create the most favorable mental conditions to help you understand what is occurring, and to make the best decisions that you can, with a healthy frame of mind. This is done by 1. Remaining calm. Scared money always loses. 2. Being skeptical. And I mean by always questioning things, and not putting too much belief in anything. Because things change. 3. Being realistic. It is no good trading if you are being totally unrealistic versus what is probable in the market. 4. Being practical. You can never go wrong there. 5. Being pragmatic. Always a great approach to thinking while trading. 6. Being adaptable. This one is huge. Because if something is not working, then you will need to change your approach to what does work. Also, nothing works all the time. You must learn to adapt and overcome difficulty. 7. Being balanced. Balance is important in everything we do. Yin and yang, ebb and flow, return to the median, are all principles of balance. And number 8. Being logical. You want to remain logical at all times. It is far too easy to get emotional in trading, and the smart money knows this. So, you need to do everything you can to keep your emotions in check, and muted to the best of your ability. So you can see things clearly, focus, and execute without hesitation. Okay. Next, picture a balance scale. This scale represents your emotional state. Ideally, you want to have your emotion meter, represented by the blue, downward-pointing triangle indicator, centered towards the middle of gauge, in a neutral position, which indicates good emotional control. Experiencing too much anxiety, or too much excitement in trading, are both very dangerous emotions. In a perfect world, you would experience no emotions at all during the trading process, but that is simply not possible. It is possible, however, to learn to train how your mind thinks. Over time, this will help lessen the severity of those emotions, and the reactions they cause. You should strive to achieve the neutral emoji status. You will probably never reach perfection, but you can certainly improve your trade results as you learn to get a handle on your emotions. For demonstration purposes, we will assume that Mr. Neutral Emoji is very well trained, and experiences very little emotion when he is in profit. He doesn't get excited about his winners, he just stays calm and keeps an eye on things, so if things start looking like it might be time to exit the trade and take profit, he can do that, without any fear or regrets. He stays humble, and continues to make solid trade decisions. Same thing happens when he is experiencing a loss. His emotions stay balanced, and he is in control. He doesn't get anxious or sad about his losers either. He remains calm and continues to observe what the market structure is doing and acts accordingly. He has not over-levered his positions, nor does he trade too heavy during losing streaks, because he knows that there will be losing streaks. And he accepts this. He practices good money management techniques and he knows his own risk appetite. And, if he is approaching his risk threshold limits, then he has a plan to manage those risk situations in a logical manner, rather than an emotional one. And last, but not least, he knows that if his trading is not in sync with the market, or he is having an off day, that he can just take a break and walk away. Avoiding a loss is just as good as booking a profit to the overall effect on his equity curve results. So the reason we say, think like a neutral emoji, is because it is a very easy analogy to remember. And remaining neutral is linked to the very best outcomes you will experience in trading. You will end up with better results, and a lot less stress. But be aware that you are not going to learn how to do this quickly, and it is easier said than done. We are about to learn why. Okay, now let's take a look at where most of us are actually at with our emotions, as they relate to trading. We want to strive to be Mr. Neutral Emoji, but the reality is you need to first accept where you are at today. So, here is a little demonstration that should help to prove the point of how we usually react in trading, when it comes to our own emotions when real money is on the line. When we enter a trade, and it is in profit, and going well, what we are experiencing is pleasure. Pleasure is something we all enjoy, and can never seem to get enough of. When that trade starts racking up heavier profits, it is going to push downwards on our balanced emotion scale. And that is going to cause us to react. Does this look familiar? How many times have you felt that? Just be honest. It is okay. We all feel that, because we are human. And we get the green smiley emoji, because that pleasure makes us feel happy. But, we have to be careful with too much pleasure. Because it can cause some negative side effects to our trading. Such as, letting a trade running longer than you should. Or, overconfidence that you have it all figured out. Because that is right about the time when you get your ass handed to you, in short order. So be aware that winning trades, and the pleasure you get from them, can adversely affect your trading results as well, by planting a sense of false confidence and letting your guard down. Now, let's take a look at what happens when we are experiencing a loss. Losses equal pain. And pain pushes down on our emotional balance, so that we then start reacting towards negative feelings of anxiety, stress, and even depression. As our losses start mounting, that pain is getting heavier and heavier. Look what it does to our emotional balance. See how the meter is deflected towards anxiety now? No longer are you feeling any pleasure. In fact, you have forgotten all about the pleasure. Because pain is all you feel right now. And, what about this? Does this look familiar? How many times have you felt that? And, because of all this pain, we get the red, sad emoji. We have to be really careful with pain. Pain is a much stronger emotion than pleasure, when it comes to trading. Because it causes us to make irrational decisions, even faster. Our brains are hardwired to avoid pain at all costs. It is a survival mechanism, so it is incredibly difficult to counter it with a rational mind. Try put your hand on a hot stove. You simply cannot keep it there. It is because your brain is designed to protect you, and keep you safe, by avoiding pain. This applies in everything we do, even trading. So, that is why trading becomes so difficult to get good at. Our brains are wired by default to lose because they are telling us to avoid pain at the wrong times. And this is where we make the same mistakes, over and over and over. And again, the smart money has figured this out. Let me give you another visual example, to help you understand why this is so hard. There are two basic emotions that drive us all. And those are pleasure and pain. Okay. Every time you take a trade setup, what is the reason you take the trade? You do it because you think you are going to make money from the trade. You do not enter the trade expecting to lose. So, once you enter a trade, almost immediately, your brain is going to kick in. And you are going to experience one of two emotions. And those are pleasure and pain. Pleasure if you are in profit. And pain when you are in loss. And remember, most of the market time, is spent in ranging conditions where prices jumping around, back and forth. This guarantees that nearly every single trade you take will be in a loss at some point, which is going to give you pain. Now, start adding other emotions to those two basic emotions of pleasure and pain, and you begin to exacerbate our core emotions of pleasure and pain even faster. Like fear. The fear of missing out. Or the fear of loss. Or the fear of closing a trade too early. All of those emotions will amplify our core emotions of pleasure and pain, even further. What happens if we add in the emotion of greed? Well, greed is a pretty powerful emotion on its own, so that makes those core emotions of pleasure and pain even harder to control. And, this is going to affect the decisions we make in trading. Then, add to fear and greed, perhaps the most powerful of secondary emotions of all. Desperation. You can start to see how you are now fully primed to be in the frame of mind that the smart money wants you to be in. You are not thinking rationally, you are emotional, and you are scared. So much so, that you are willing to do anything, to just end the pain. Your brain is wired to work this way. The pain you feel, is real to you. And that pain, is their opportunity. So what happens? Your brain says, do this. And now, you are in that mindset where you have lost all rational ability to control your trade decisions. And the emotions are so strong that you cannot stand it any longer. And you have to react. It's just like putting your hand on a hot stove. You simply cannot stand the pain any longer. And you pull away. Your decision is the wrong one. And you lose again. This is not easy stuff to accept. Remember when we said that sometimes it seems as if the market does the exact opposite thing that you do, nearly every single time? That is because a lot of the time, it is in fact true. The smart money traders understand your psychology, and how to take advantage of it. Don't take it personally. It has to work this way. The people who know what they are doing, are never going to tell you what to do because that would not help them. They need you to lose, in order to win. There is a scene in the movie, Good Will Hunting, where Robin Williams is telling Matt Damon, "It's not your fault," over and over again. What he is trying to do, is to get him to understand a truth, as to why things are the way they are. So he can understand it as not his fault, even though it causes him deep pain. It's not your fault, you are losing. You are probably not even aware. Because our brains are hardwired this way, and unless we think differently, we are doomed to repeat the same mistakes over and over again. And the smart money does not provide education to what they are doing. Why would they? They need you to lose, so that they can win. And, as long as you keep trading the same way you have been, without changing how you think about trading, you will probably continue to experience similar results. No matter what new indicator, or price pattern, or strategy you try. So you see, the first step in learning how to trade profitably, is to follow what the profitable traders are doing. The big banks know and understand this. And they use that psychology to trade against you. In fact, a very large portion of their trading business model is based upon dumb money losing. This is cruel, folks. But it is an unfortunate reality in currency trading. All that focus you are putting on one and two candle formations, or an indicator signal, or special strategy, is likely pointless because the banks need to create liquidity situations at the expense of dumb money, in order to fill their positions. Do you think they use an array of flashy MACD or RSI indicators that you are using? Or do you think they look at where the stops of retail traders and dumb money are? And then formulate strategies and manipulate price around those positions? It is an unfair game, because we do not have the same information they have. We cannot see what they can see. We do not even use any volume indicators in our methods. How is the volume of the one single broker we trade with, in a decentralized market, going to possibly match the information the banks have, when they can see the stop clusters and we cannot? But just because it is unfair, does not mean you cannot learn a different way to formulate your strategies. The band Green Day has a song called Know Your Enemy. This song has lyrics that really drive the point home, and that is, do you know your enemy? Ask yourself, how much time have you spent studying what the big banks are doing and how they trade? Have you put the same amount of time in watching how they manipulate and move price to create liquidity to fill their positions at the expense of retail traders and the dumb money? Have you tried to develop and test out strategies around their manipulations, with the same amount of effort that you do on all those message boards, searching for that one perfect indicator? Or that one perfect strategy, that is going to turn it all around for you. The harsh reality is until you come to grips with your own trading psychology and how you are being manipulated by the smart money traders, you will probably continue to not get anywhere, or worse, lose even more money trying to figure it out. There is a wise saying, if you are in a hole, stop digging. Anyone can learn to trade profitably, but it takes a lot of time, effort and dedication to learn. You have to decide which direction you are going to put your time and effort towards. More of the same, that is clearly not working, or trying something different. Like perhaps, trying to understand what the people who actually move the market are doing. Then figure out how to tag along in what they do. But first you must be willing to change how you think about trading. So, once again, here is the recap of the theme of this video. How you think is more important than you think. In our next video, we are going to dive deeper into some of the psychology issues discussed in this video, and how they relate to trading. And, we will also offer some solutions and pointers of what you can do about these problems, to improve your trading results. Also, we recently started a free Discord server. It is a great interactive community resource and we will be spending much of our teaching time dedicated to the Discord server. So, make special note of the Discord invite link below, and make sure you sign up. It's absolutely free. Don't forget to subscribe to our YouTube channel. We are new in this space and need your help in growing our community. And hit the alerts icon as well, so that you can be automatically notified each time we post a new video or live stream to YouTube. Thanks for watching, and remember, think like Mr. Neutral emoji.